What's going on, Jim Brown? How you doing, buddy?
Pretty good. Just had a question for Michael. So when we would, your live stream, by the way, was phenomenal as usual. Um, what I was looking at is the 925 1 minute BISI before it took that top sell side. And then at 938, we went up and touched that and couldn't hit consequent encroachment. I wanted to know if that's, did you notice that?
I was looking at 925's candlestick and I was telling myself that you all should see that as the fair value gap that can become an inversion fair value gap. They actually used it on the 38 minute after 9.
Yes.
It traded up into that and sold off. But again, it's very difficult for me to teach with the can you do me a favor?
Yes.
When you're done talking, just put it on mute because I'm thinking you're going to say something, and I'm giving you room to say something. Like I'm hearing the background sound, so I'm thinking you're about to say something. So it's causing me to want to pause to listen to you. So let me make my statement, and then if you have something else, you can come back and say it again. Okay?
Perfect.
When you okay, thank you. The pantomiming I'm going through is to save us something I'm not going to put myself through and everybody else. Like I'm not going to do a 4-week session of just going out here and just randomly taking every fair value gap and short-term run on liquidity. That's what a brand new student's supposed to do. It gets them immersed in price action. It gives them something to measure. They got a baseline. So that way they can see progress over not one day, but weeks. But after that 4-week period, they have a nice sample set of information they can go through and then say, okay, he said in another lecture that the opening range tends to draw price back down into half gap. So I'm going to use that because there's a built-in 70% advantage to do that. So I'm only going to be looking for shorts when we open up a premium gap high, and it affords me a range down to half gap to get something that's 15 handles or so. So by me saying everything I know in these lectures on entries, the model and the pretense is we're looking at someone that's only been doing this for 4 weeks. They're not going to be bringing in reapers. They're not going to be bringing in, everything else that's available. We're trying to, and what I'm trying to do, and I may not be doing it successfully or as good as I'm aiming for, or what many of you would hope to see, but I'm trying to assume that by a time jump, we're thinking like someone that has just only had 4 weeks experience practicing in price action, doing simple little runs. So they wouldn't really know that inversion fair value gap is there. But for someone that's more versed like yourself, you've been around a little bit more time than 4 weeks. Yes, that observation is correct, but I'm trying to not demand that the 4-week experience level person would see that yet.
Okay, great. I totally understand that. I also wanted to ask you, I liked how you figured out where that low would be, how you measured with the fib. Prior to the market, prior to going down, what I did, and I want to know if this is correct because I'm not sure. I went to Wednesday on the 1 hour, Wednesday at 12 o'clock low, and then I went to the high, and then I put a fib on there, and it actually ended up hitting the 50%. And also, there's a bullish 1 hour fair value gap. Is that correct where I put the fib?
I don't know exactly. If you make a chart and post it, I'll look for it and I'll hard it if that's something that makes sense to me. If I don't hard it, just assume that you found something that you can pursue on your own. It has nothing to do with me.
Okay.
Is that fair?
Perfect. Thank you. Appreciate it, Michael.
You're very welcome.
Thanks for your streams, man. They're really phenomenal. And I think you're doing a great job. So I wouldn't think that you're not. So
I appreciate
have that in your head.
I appreciate it, man. Thank you.
All right. Thank you, guys. I'm gonna let someone else come up.
Good feedback, Jim Brown. We appreciate you, buddy.
Thanks, Kit. Appreciate your spaces, bud.
All right, man. Have a great one. Zachy, you're up next, bud.
Hi, everyone. Michael, the space was phenomenal today. And actually, yesterday's one was actually more fire. A lot of sauce on yesterday's stream. And so what I wanted to ask is, it relates to yesterday's stream about high frequency, where you mentioned you can trade the 15 minutes, and there's market maker models and market maker buy or sell models on, like every 15 minutes. And so how does, like someone, for me, I can make 2 or 3 clinical decisions. Like I can engage with 3 or 4, like 2 or 3 15-minute windows, but after that it's like, it gets foggy for me. How does someone overcome something like that? And yeah, that is the first one. Although I have another one, which is a hypothetical question.
Well, to answer your first one, obviously the experience factor, how much time you've been doing it, how much time are you collecting information and data. Don't just take my word for it that there's a market maker buy model and sell model every 15 minutes. But don't just listen to me say that and then go and parrot that out into the community, into the ether on social media because ICT said so. That's the gospel. That's not it. I want you to go in and study it. So because I just taught it yesterday, there's clearly no way that you could have had enough time doing anything with it. So it's normal for you to feel a great deal of uncertainty. There's no shortcut around it. As I mentioned today in today's stream, you have to place yourself in front of price action and look for it. Because I told you it's there, now you can start looking for that framework to exist in the sub 1 minute chart. It's going to be there. Every 15 minutes, it's going to be there. Now, just because it's there doesn't mean that you take a trade. But you need to be watching it, studying it. If you can't watch it live, find a way to record it. Get your computer set up so when you're not able to see it live because you're sleeping, working, doing whatever you're doing, it's capturing that for you. Market replay is not enough. It's not going to be enough. You have to watch every individual candlestick form as it opens and closes, what its high and low is, how it retraces intraday or intra-candle. That's the only way you're going to get it. There's no secret science to it. I have no other advantage to get you around that. If I could, I swear to you in God's name, I'm telling you, I wish I could just say, hey, here's what I understand, and I can tell you in 5 minutes, this is all you have to do. And then you learn it just like that, and you can go do it. It's not like making a peanut butter and jelly sandwich. Like it's not. You have to look at this stuff, and lots of things repeat. They all have similarities, but they're not exact. And that absence of precision and duplication exactly as the previous ones, that's what, for instance, like my uncle. He wants it to be that binary. It always looks this way, and it's going to look slightly different. And that little bit of variance, but still maintaining all of the characteristics and premise behind it, that's what leads to us taking a faith-based jump, leaping forward and saying, I trust this information. I'm going to act on it. I'm going to execute on it. So to answer your question, I went a long way around the barn to say, spend more time looking for it. You just learned about it yesterday. So there's no way that you spent enough time doing it. If you spend a couple weeks looking for it and you're having an issue with it, come back into the roundup and then mention it again, and I'll give you more insights. But right now, all of you just got introduced to the idea. What's your second question?
So it's a hypothetical question, and is I wanted to ask if you were to, like, let's say you can trade every hour. Someone is put a gun on your head and says you can only trade 1 30 minute of every hour. Is either you trade the first 30 minutes or the last 30 minutes of the hour. The hour doesn't matter actually. So which 30 minutes will you go for to trade? Like, and you stay with it. It's for life.
I don't think there's any advantage of like the first half of an hour or the second half of the hour, because the formation could actually be much more favorable for me based on my model, what I want to trade at the 15-minute after the hour. Now that's not a macro time, so don't go running off with this and start creating fucking mentorships, okay? And selling. Okay, Michael's taught the secret macro times are at 15, 30, 45. No, that's not what this is. But I don't think there's any real concern for the reason for that question. Like there's no advantage to seeing the first 30 minutes of the hour or the second half of the hour. You're subdividing 60 minutes into 15-minute intervals and anticipating a measure of high frequency trading that occurs already. And then you can get in alignment with that using what I'm teaching. So it's every 15 minutes. If you're saying gun to my head, what 15 minutes would I trade? The first 15 minutes I'm sitting in front of the chart. It doesn't matter to me because it's going to be there.
That's perfect. That's perfect. I had a question, but I will give a room to the next, the next couple of speakers. But I have another.
What's your question, Zachy? Go ahead, jump
So,
in. You're good.
my last question is there's an execution video, and actually there's a lot of insights and gems on your execution videos. There's a video because you were executing. It was close to the market on close macro. It was, I think, the last 15 minutes of an hour that you are executing, and you subdivided. I think you have only 2 market and close macro execution videos on YouTube right now. And when you are engaging with that the last 15 minutes of that hour, you subdivided. I think the last 3 minutes you said it is resetting the range. You put a vertical line there, and you said it's resetting the range after this. So is that something that like every hour goes or every candle goes through that resetting the range, where the last 3 or 4 minutes, whatever, that it resets the range, or it's only specific to that 15 minute of the last market and close macro?
No, it's not limited to that at all. In fact, I utilized that premise today, intraday, in the live stream. When we were in that time distortion, all that consolidation, and I mentioned, let me make sure I got the right candle time, so I don't want to call it the wrong one. I used the 945 candlestick on 1 minute MNQ. I said the midpoint of that, or consequent encroachment, we want to see that become like it's the real resistance level now for any movement higher. Once it starts going lower, we would not want to see it become that level didn't trade through it. So that's an example of resetting the range, redefining the dealing range. So when we're using wicks, many times that I use that lots of times with wicks. If it's a premium wick or a discount wick, in deference to where I'm in price, if I'm expecting continuation of a specific direction, I won't look at old highs. Like I said today in the live stream, I'm not concerned about that high now, where I would have rather seen it get traded to. If I was Phil, I would have ran that short-term high at 938. But then we started showing price action dip below the consequent encroachment of 945's candlestick wick, the midpoint. Once we start putting bodies underneath that, then it must go back and listen to the stream. It must start selling off aggressively. And I want to see it trade not only below that short-term low at 941, but not only just to full gap closure at 341 even, but I want to see it to trade to it and through it. So I redefined and determined, basically, in the future, I casted forward in the future what the dealing range would be. So it's an unrealized dealing range utilizing that standard deviation of the opening range gap. And that was an example of me doing that live, explaining something that wasn't in the chart yet, why it should perform a certain way. So it's not just limited to what you were saying. You'll see me do a lot of that stuff when we're doing the live streams.
Yeah, that actually answers most of the question. And is it like time specific, like it can only happen between these times of windows, or like it's also like price, it relates to price where like it doesn't matter if we overextended, it has to come back and reset the range or something like that? Or is there like something related to time where this time, like it resets the range, or it goes back and retraces it has overextended for some period of time, something like that?
There's lots of things that go along with it that make it useful and consistent, but it would be outside the scope of me doing even a 4-hour video on it. It's gonna take some lectures. You're talking about top tier stuff. It's not like here it is and then you can run with it. It's a lot of things you have to weigh in the balance.
Okay, thanks.
I'll teach it. I'm teaching, but you got to give me time. I have to present things that are going to be supportive. Then when I release other stuff, I could say, look, remember when I taught about this and this and this and this? All of those things give the support around that idea that now I'm going to reveal at a later time. You have to know, you have to have a baseline understanding. And simply seeing me do something that looks wonderful and it looks mystical and it's cool and it's very precise, I'm leaning on other things. A lot of it I've taught, other things I haven't taught yet. And when you have that supporting information, it makes it understand. It's palatable. you'll understand it. Because if I just gave you the lecture ideas now, even if I spent a day and a half teaching it, you still would have an incomplete perspective because you haven't learned the other things I'm talking about that would support that idea. Just know that I'm going to teach it, and trust me, I'm going to get to it. Okay? Is that fair?
Thanks. It's fair.
You're very welcome.
Wow. Great conversation, Michael. This is
How
really,
you doing,
really good.
kid? How you
I'm doing
today?
fantastic, buddy. I'm doing fantastic. Our day's coming up, man. I mean, I was looking for some emails, whether we were going to do a live stream or I mean, you'll hear from me in email, but I've been, as you know, like I mean, we're coming up on the 18th, buddy. So it's nice. It's nice. We're at 36 months, which is nice. So yeah, we're coming up there. So that'll be this weekend. You'll probably get an email from me. But yeah, we're on the 16th. I've been definitely thinking about it, real heavy on my mind. So, as you know, but yeah, bro, things are great. Kind of, I mean, I was looking at models today just real quickly. I was just looking at like midnight. I was just really looking at our IPTA intraday profiles coming from episode 5. So my entire day was framed out pretty much in that regard. So real simple and time-based arrays and what it is to be in the IPTA open, IPTA close, and everything else that we've had since then.
What'd you think about the stream today?
I thought I love it,
challenged.
man. I love it. Well, I mean, one thing, I mean, what TradingView is doing is like it's super slow, whatever. That's wild. But I mean, beyond that, I love it. I mean, the live stream, what you're showing and calling out, and I mean, you're unveiling, and I see a lot of how, like, I feel like I understand a lot more how you teach now because I really there are elements that you haven't taught that I feel like I understand, and there are folks within the community that also do. But as you're constantly bringing new concepts or ways in which to stitch together specific arrays every day. And this is why the live stream's so good, Michael, is every day different arrays matter. That narrative is completely different every day. And for the uninitiated, the newer trader, they're trying to fit that square, that circle into a square, right? They're trying to like, okay, I have to do this. I have to do this. And you're like, well, nope, today's different.
Mm-hmm.
And that's just the part of the market is the newer student doesn't understand how the Rubik's Cube is constantly kind of shifting, right? Like the sides are constantly like reconfiguring that every day you look to try and solve or come to the market with a fill in the blank template or answer. And your live streams are showing very clearly, we're dealing in, 4D chess, this market, the way it's moving every single day. Certain arrays are going to matter and are going to be more salient. And the way that you're weighing and constantly drawing people's attention real time to specific points in the chart, again today, it's kind of funny and it's ironic. You're like, well, look at this, look at that, look at this, look at that. And then it's like, hey, wait, price went to here, went to there, went to there, went to. So yes, I mean, bro, it's a masterclass. You're doing it. The Harvard professor over the candle breadth of the chart. I mean, you're doing it. You're showing folks. They might scratch their head, some folks. Other folks are like, wow. And then you're connecting dots. I think for a lot of the community, this is just my personal opinion, is that you're connecting dots. And your entire mentorship affords students that opportunity within themselves.
Do you think I'm doing a fair enough job in presenting yesterday and today through the lens of someone that hasn't digested the entire YouTube compendium? But
yes, because you here's the thing, bro. Your live streams, you come to the live stream saying that you are going to limit your own concepts. You're coming to the chart literally like a horse with blinders. You purposefully, mindfully come to the chart and say, I'm going to pretend like I'm not me and that I'm just going to be a student who has a very limited understanding of this knowledge. And then you're going to take that limited concept and do your best at essentially tying one hand behind your back, which is putting you in the lens of the student. So I think it's a very great exercise for the student to witness because you could come with so much more at any given time. Yeah. But the fact that you force the conversation through the paradigm of a newer student, it's very easy for the student to relate to the episode.
I totally agree. And there's not many moving elements or things. It's very concise and clear. I totally agree.
I appreciate that because I struggle with this over the weekend. Before we this, I was thinking to myself, like, how am I going to be able to teach in a way where I'm going to reach as many as I can, and the majority of you that are brand new. I appreciate the folks like you two that've been around for a while. I mean, you've seen some things. You've been around the block with me. You've seen some stuff. But for the brand new student, number one, they probably heard my name, and he says he coded the algorithm. He's talked about an algorithm that doesn't exist. It's buying and selling pressure. So many times they're going to come to me with the already preconceived idea about something, about the man person part of me. And I'm trying to do my best to give them something that is simple enough to observe, and then they can go in and do the research without having all this extra stuff that bog them down. And that's what I'm struggling with as a teacher. I'm trying to make something extremely complex in a climate that is extremely complex right now, because this is difficult for me to be able to teach something while my mind is racing about a thousand different other things. Well, I could do this right now, I could do that, but it won't have a place for the context of the lecture. So that's why I stay talking constantly, because if I give my brain a chance to start running up, the RPMs will shoot up, and I'll have all different other ideas of what I can be doing, but it's not going to be helpful for what we're trying to do here. You're going to see me go wild this year in live session. You're going to see
The live sessions. I can see that struggle with what you're saying, and even what you're saying right now. I can see that. I can empathize with it, but I can tell you, you're delivering extremely strongly. I think anyone that is newer, that doesn't or isn't completely aware, they're able to hone in, lock in to the simplified approach, and then your intermediate and charter students, I mean, they're going to be applying their concepts if they're watching you. They already know that you could be applying one of literally 81 different concepts in that exact moment.
Yeah.
So,
I mean, look at the low
I
of the
want to
day.
say something. I'm sorry.
Go ahead. I'm sorry. I didn't mean to interrupt you, but I was just going to say, while we're listening to you, just take a look at what NASDAQ's done and where the low of the day so far is.
oh, the 950 macro? No way. Wait. You mean that happens often? More than once?
Yeah.
Wait, you mean the macro might be something I should maybe think about?
So time and price. The price was the standard deviation on the opening range gap that was outlined in real time before we even got down there. And we had a little bit of flirting below it a little bit. That's fine. But we pulled back up into the regular trading hours opening range gap low, and then back up into consequent encroachment. And now, if we get back above consequent encroachment, that 466 level is in play. So, I mean, I'm doing my best as a teacher, and I know I'm not satisfied person. I want you to understand that I'm trying my best, given the market conditions that we're at right now, and trying to encapsulate and remember what it was like for myself. And I read some journals over the weekend and trying to like bring myself back to the struggles I had and the weeping that I had and things that I would cuss myself out about. Very, very toxic journals. Like I was ripping my ass to shreds. And I'm trying to think in a way where many of you might be struggling to that degree. And, or if you aren't there yet, you probably would be given enough time and opportunity to do so through frustration. So I'm trying to present this in a way where it's allowing you to have a baseline understanding. There isn't a whole lot of things to consider each day, and just keep doing that. And that will give you foundation. It will give you strong, it doesn't feel like it will be strong foundation, but it will be. And these are the things I could have done to prevent myself from becoming much more toxic towards myself in the beginning. And just know that I'm taking all the feedback, whether if it's good or bad, I'm utilizing it, because if I'm falling short of something, let me know, because I'm trying to be a better teacher while I'm doing it. Not just, I can lean on my skill, but me demonstrating it isn't so much the equivalent of you being taught how to do it. And I'm aiming for being the teacher teaching you how to do it versus just demonstrating my toys.
And that's I will say again, just as someone who can speak on it. I've tried to teach and I've overcomplicated a lot of things, and I've made it more difficult for some folks in that process. I have found distilling the concepts the way you are is always going to be the best, especially within a live stream. If it's a lecture, if it's a series where you're going over something over price that's already happened or that's stopped or that's developed, then you could go through the idea. When it's real live stream, real time, and there's the unknown variable and you're predicting what's going to happen before it happens live, then keeping it simple, as you've done, I think is, and each class is different, right? Yesterday was the NWOG and the RTH. Today it was, the minor side and the buy side, the what you were pointing out. Every single day, the matrix is evolving, and it's super important for the student to understand that. And as a teacher, I think you do a great job of pointing that out.
Yeah, can I say something to Michael about
Sure.
this as well? I have right now, I have like 2,500 people following me, so that's not near as much as neither of you. But my DMs from newer students are a lot. I'm getting a lot. I have a backlog. Like only today, I have like 35 to answer. What I want to say about that is that most of them are asking technical questions, and they are not asking things that you have clearly demonstrated. They are asking advanced questions. For example, one that I saw quickly a few minutes ago was about, when there's the WIC has a preference over the fair value gap and over the first presented fair value gap. But what if there's not a fair value gap? Can I then use the WIC either way? Stuff like that is what they're asking. Or if I want to use the grid or the quadrants, how do I know if the NWOG or the RTH gap is more important? So they're asking questions that go a little bit beyond of what you have said recently about it.
But
And
they're
that to
also
me,
reflectant of core content and larger, more in-depth concepts that have been taught.
yeah. But to me, it shows that it's not that Michael is not presenting it in a good way. It seems like they understand. They are new students. They're all new, the people that are DMing me, and they understand the class, the lecture, and they're asking like more advanced things. So to me, it sounds like it is landing well, like you're intending to do.
I appreciate that.
Excellent feedback. Do you want to keep going, Michael?
Yeah. I apologize for interrupting everything and the
No,
flow that
you're not
that was.
interrupting, bro. We're here. This is us. This is what we do. So this is what we do. You're here for feedback. Students are here to ask questions. So we are here to learn together. That's what the process is. So extending that from YouTube here to X, having the interaction, it's wonderful. Really, really, really good feedback from everybody, as you know. So, and all we're doing is going to get better. All we're doing is strengthening and refining what we're looking to do and provide for the community. So, with that said,
I have a hard extraction time at noon today. My time.
yeah,
Okay.
that's good. Yep, it's my time too, by the way. So, which I realize it's not everyone else's, so that's why I said that. And yeah, I mean, we got a lot of folks here. Dr. Tony, Dr. Tony's here. He had a question of his answered on the YouTube channel. What's up, Doc?
Hey, I'm doing great, guys. Thank you. And thanks for the live stream today. I'm Dr. Tony from Indiana. I've been trading ICT for 4 years. I did want to comment once on for Michael, is that, I've been studying this for 3 or 4 years, and I think I put in the time and effort, and these live streams are the best. Even though they're very primary, your basic stuff, it's just, it really helps, just the repetitiveness of seeing and watching you and seeing what you're thinking about. It's incredible.
Good feedback. Good feedback.
Thank you. That it's different when you watch it happen live, isn't it? It's a total dynamic experience where it removes the ambiguity, it removes the uncertainty, or it was a cherry pick type thing. watching this stuff breathe and evolve across time in matters of markets that have this much money involved in them. And here we are, different walks of life. You're a doctor, I'm the average Joe. Kit, he's a engineer of whatever he was doing in
Yeah, I'm
construction.
construction. Yeah, construction guy.
And here we are, we're literally calling forth and summoning the market in a way where there's so much to appreciate when you understand what you're learning. And I'm not talking about me. I'm saying the information that we have that's available, looking through the lens like that we have, it's just it's a really neat experience. And I'm glad that I hear the students' feedback because I know I would be over the moon if I had this given to me when I was younger.
It's been awesome, and it's been discouraging for me because I do know I'm a doctor and I know what it took to become a dentist, and I'm actually a dentist, right? But what it took for me to become a dentist and all that hard work, and it took 4 effing years. But what's cool is that's why I gave myself some grace in that this is going to take a while. I mean, year 2 or 3, I'm like losing money still. I'm like, this sucks. But I'm like, it took me 4 years to become a dentist, so I'm going to dedicate 4 years to figuring this out. But these last streams are their money. I mean, it's been the best education that you've delivered.
Thank you so much for that. I appreciate it, man.
I do have 2 questions though. Can we go to that? On the I wanted to know why you chose the 946 wick to watch, because you called out that wick early. 5 minutes later, we get a really nice fair value gap down there that's also in line with the opening range gap target. But then that becomes really weak. I mean, the fair value gap gets blown through and back down and then back blown through, and everything comes back to that wick. And I just wonder what made you choose that wick, because there's a few wicks right there.
The 945 discount wick, the one I was talking about, the consequent encroachment price needs to stay below that now and can't go above it.
Yes.
Okay. While we were in consolidation during all that time distortion, if you look across all the candlesticks, that is the most prominent long wick. It's the one that stands out. All the other ones might have wicks, but this one is the largest one. So that one has enough range to then divide it in half. So because it acts as a gap, we want to see it stay below the midpoint. It can touch the consequent encroachment, but it can't go through it. And it's better if it doesn't touch it at all, just like we teach with regular fair value gaps or imbalances. We want to see the premium sensitivity. That means the upper half, don't lay any bodies down in that, keep everything below it. So it was the fact that that one stands out so prominently against all the others. There's nothing highly technical about it. It's just that's the one that's the most obvious salient one.
Okay, so then what happened when that 1013 wick came up there and just took us out? Is that just a stop run? Is that what that is? But it seems like to me it was based on that wick, that gap. I mean, I appreciate that part about it. But
yeah, I got you. I'm looking at it. That was a return back to consequent encroachment. When we were below the regular trading average opening range gap low, I was stating that it can return back to that now, and then if it continues more, it would be reasonable, and you can allow for it to trade back to consequent encroachment. That 1013 candle literally goes back to consequent encroachment, trades to it and wicks through it. Once price goes down to that standard deviation that we did from the opening range gap at these old eyes of mine,
954, whatever.
Yeah, 955 is low. When it formed that low, that completes my morning session in terms of expansion. Then it's due for a retracement. As I indicated, we can see it come back to the gap low, which it did, and then return back to consequent encroachment. Once it does that, be done. You don't demand anything more than that. If you're beginning, that's enough for someone with 4 weeks experience going forward looking for things like this.
And if you're experienced, we want to see 26504. Okay, anyway, sorry.
Great, Michael. I appreciate it. Thanks very much. Have a great day.
Thank you so much.
I know you'd like that one. Keeping it going, keeping it flowing. I love these conversations. They're so great. Um, let's see. Miguel?
If I can add one real quick thing,
Yeah.
I love I love when the professional side of our audience, and when I say that means people we look up to when we're little, like, what do you want to be? I want to be an astronaut that eventually really goes to the moon. I want to be a surgeon, a doctor. I want to be
An
a
astronaut.
lawyer. Yeah, yeah,
Zing.
astronaut.
Wait, yeah, not. Wait, did we just go to the moon? Wait, did we? I don't know.
That's another space. We gotta do one just on that. I would love to have that
That's a
conversation.
good one. That's a good one. I'm
Dr.
That's a weekend
Johnson,
one.
Hey,
We have
that
a
is a weekend
Johnson,
one. That is a weekend one. We actually what we do, Michael, we end one and then we just start a new one. It's just for anyone that wants to come back. Hey, we're starting a new one here. We're gonna go over Artemis and Apollo and all those fun fictitious journeys and what they really mean.
So what I was gonna say was I have I have aerospace engineers, I have surgeons, I have dentists, I have general practitioners, I have lawyers, I have people that are in politics, and just leave it at that. They're all students, different walks of life, and when I was growing up, and even now, I don't consider myself a mental giant, but to hear them come forward and say what I've been trying to tell all of you too is you're trying to learn something that's extremely technical and extremely technical. And if these individuals that I believe have higher intellects than myself, if they're being honest, they're saying, "Look, I'm not finding it is as easy as I thought I could because from an aptitude standpoint, scholarly in school, I was able to have a high GPA and I was able to overcome all this in academics. But here, like I'm really struggling with this, and I'm looking at this as a knock against myself. And don't look at that way because we all feel that. I felt it. You're feeling it, and in the higher tier educated part of our community is coming forward and telling you the same. So what makes you the exception? Don't believe that you're going to be the exception. Accept the fact, embrace the suck, and just get through it. It's going to be worth it. That's it. That's all. I'm sorry.
I love it. Jump in here, Pit Munch. I love it.
yes, yeah, I wasn't gonna say it, um, but I wanna jump into what he's saying right now and reveal something that I wasn't gonna reveal. But I am actually a lawyer, and for my profession,
Shocker.
and and what happened is that when I started like literally thriving in my career, my health got the best of me, and I had to stop. And that was like a very crushing moment because I had worked really, really, really hard and let a lot of things go by, social life, relationships, everything, to achieve that. And when I thought the fun part was coming, then it all crushed down. Um, and I was panicking. What am I gonna do? What am I gonna do? What am I gonna do? And in the midst of that, I was also in pain, bodily pain, chronic pain, and more stuff. And then I found trading, and that's when I found Michael, your channel, and I decided to go trading to do trading. And just like the dentist right now, I told myself, you went to study in law school, you struggled financially, everything. Um, you can take. I gave myself 5 years, not even 4. I said 5 years, you're gonna do this trading thing, and if after 5 years there's no progress or it's not going like you envisioned, then you can let it go. But you're gonna do it 5 years, and that's what I did. And I'm now 3 years in, and yeah, it's going fine. So I wasn't gonna share this, but after hearing that, I thought, I'm gonna share it. I gave myself 5 years. I'm in year 3, and it's way ahead of what I was thinking. Just by taking it serious, taking serious notes, watching the lectures, treating the channel, the YouTube channel as an online university, and studying that way. So yeah.
I love that, man. Thank you for sharing it. You don't have to do those things, but to me, I'm honored that you would consider me as an educator, as a teacher. I'm not always polished, and my presentation always isn't the most elegant. but I absolutely give a fuck about all of your success. I consider it my goal to be able to communicate that to all of you. And obviously, you can see I don't run out of inspiration or energy. I want to do it because I want all of you to succeed. And I think that hearing people coming from different walks of life, and we all have a high, whether we want to admit it or not, we all have a higher opinion of people that are in the professional side of things, and lawyers, doctors, and all that. We won't readily admit that they put more effort than the average person does. And for you all to come out and say these things and kind of like help ground everybody, saying, look, you know, it ain't easy, but it's worth doing it. And I want to just let you know I appreciate that.
Yeah, thank you as well.
It's kind of fun when you look around. You're like, oh wow, we got engineers, we got doctors, we got lawyers. We actually have a bunch of professional folks here just hanging out, right? Not that it matters, but it is nice that people have kind of their own careers or they've been able to prepare themselves. Notice Price raking, taking these highs. It's on a mission for that 504, ain't it? Whoo! Right off of midnight. It's like a weird time, even. Like, I don't know.
Wow, look at that. If I could have known that I was going to do that, I could probably go online and teach people how to do it.
If you
It'd be
could,
great.
bro, if you knew how to do that, you could probably like wrestle up a bunch of other folks that might actually want to learn from you.
Can you imagine? Can you
I know.
imagine?
Wouldn't that be cool? Oh, wow. Jim Brown, Zachy, Nico Wayne in his house. We got Profitable Loser here as well. Looking forward to hear from Sam. We got Double Trader here. But Nico Wayne, new to Trader Roundup. How's it going, buddy?
It's going well. How are you doing, Kit? Can you hear me?
Yes, sir. Protocol, pretty please, and jump in here.
Okay, my name is Isaac, go by Nico Wayne. I've been studying ICT since 2022. My model consists of trading consecutive candle ranges, grading them, applying premium at discount, and then buying at discount, selling in premium, and it's kind of plug and play. My question is regarding the stream from the, sorry, I'm a little nervous here. First time ever doing this. From April 15th. So on the 26-minute, 12-second mark, you said, pointing to a 15-second chart, you said, this is a volume imbalance silver bullet.
Wow. Hey, Nico Wayne, just so you know, I have Michael, just so you know, I have like 4 or 5 messages in my DMs specifically about the volume imbalance, what he's mentioning right now. Go ahead, Nico Wayne.
So there's 3 questions. First one, is a silver bullet a first presented gap that occurs during a high probability expansion time interval?
Yes.
My second question is, since you pointed to a 15-second candle that's outside of the 10 to 11 silver bullet window, that would suggest that lower time interval silver bullets exist. Is that correct?
It's like a smaller metaverse inside that sub 1 minute. So it's not locked to everything macro that as I've taught. It has its own little universe and things that you'll learn. But yes, you're on the right path.
Okay. Third question, do silver bullet gaps occur every 15 minutes? Because we know that fair value gap, I mean, if it's in low resistant conditions, occurs every quarter or 15 minutes. And if so, what are the time and price characteristics that classify a gap as being a silver bullet?
They form every 15 minutes, yes, but this would require a whole lot more bandwidth than what we're going to have like this, like a couple minutes exchange here doesn't afford me enough to be able to teach everything that you're asking for. I wouldn't be satisfied even beginning the conversation. But these are all topics that we can cover. And if you're interested in learning these stuff, if it's not just you, I mean, if everybody else is interested in learning that stuff, I can do a complete presentation around it.
Okay, I'm going to say this. If you're here listening, there's a bunch of folks here. If you want to see a presentation, share the space. If you want to see Michael do it, share the space. This space should have more shares than any other space, and it should be shared by the folks, the 22 hundo listening at this very moment. You should be sharing this because you want that lesson. If you don't want the lesson and you don't share, then clearly that's going to be a sign. Okay, I'm just going to say, very simple. You got one very clear binary response to Michael's statement here, and that's if you would like to learn more on the silver bullet, the fractility of this silver bullet statement. Questions by Nico Wayne. Fantastic questions, Nico Wayne. Love it. An astute student. But if you want to, folks, then you're going to share it. I'm just going to say that. You're going to share it. So thank you very much for that. Nico Wayne, really great questions. Jim Brown, you're back up.
Yeah, I just wanted to tell Michael that I posted that chart in the chat. I just wanted to see if that was the right placement for that fib.
That's cool. That's cool, Jim Brown.
Thank
And
you.
you follow the assignment. That's good. So we'll follow up on that. Very
Appreciate it.
cool. I have a question coming from our our loved mechanic and very good friend out of New York, Pippi Banks. He has asked the question. He cannot come on, but he has asked, and I will ask on his behalf for him, Michael. He is asking very specifically if you could talk about just a little bit or briefly the in regards to time distortion. How do you separate that from accumulation and consolidation? That's literally his question, word for word. I believe it's also in the comments. It's a good question from a charter, and you've touched upon time distortion as well, Michael. Well, that. Power down, power up. X is undefeated. We get it. Hold up. I'll get you back up here, buddy. There it is. Did you catch any of that? Yes, sir. Did you catch any of that?
I couldn't hear anything. I couldn't talk. And it just kicked me out. I just tried to rejoin. I'm
No,
sorry.
no big deal. It's all good. So, Pippi Banks from the charter community, our favorite mechanic from New York, has asked a question. It's in the comments. I'm asking on his behalf because he cannot take the horn. But he was asking specifically about time distortion, accumulation, and consolidation, and if you could talk about what separates or differentiates the time distortion from accumulation and or consolidation. That's the charter question from my boy Pippi Banks.
Okay. Time distortion is basically what everybody else is going to call chop or noise. And the way you bring resolution to that conflict of watching price action where all the candles are joining the same little range, you go up in time frame. I did that this morning. It showed that we were inside of a 5-minute sell side and bounce, buy side efficiency. I think it was a suspension block. I can't recall now off the top of my head, but we were in part of that. And once we had that wick that we were being questioned about by our dentist compadre, that became a critical delineation between knowing where the market may go to. We wanted to see it go heavy. Once it got down below the midpoint of that wick, then that time distortion or consolidation, or through the lens of a retail trader, it's chop. It's trash market. It is until you get more intel. The intel was that wick, and then waiting for price to trade down below it. Then once that happens, you heard me as I did in the live stream, it needs to start moving lower. It needs to start doing it now. So knowing when these consolidations are occurring until it gives you and tips its hand, basically, it is just basically a pause before the next run. We look inside there for details to tell us what it may do. Obviously, we had a heavy-handed bias that we wanted to see lower prices, the gap, trying to get down into reaching lower. So with that premise, it kind of like doesn't just leave us in the limbo of retail looking at chop. We look at it as it's time distortion. We clarify it by going to the upper time frame. So 5 minutes tells us we were part of a fair value gap that would be justifying continued lower prices. Then that wick formed. I took your attention to that wick. I said, okay, now it starts going below the consequent encroachment that we want to see it start to get heavy here. In other words, we want to see it start moving lower, show willingness to want to move lower. So we're not just in sideways consolidation. We're in time distortion, with a bias, we want to look for evidence that's going to move a certain direction outside of it. So we're not breakout traders. Okay. A breakout trader would have expected it to go lower than the previous low, and then they would be a part of that move. Okay, so we're not breakout traders. We're anticipating, we're not reacting, we're anticipating the movement of price action. So the characteristic that we would all agree that we're inside of a narrow consolidation, retail perspective, institutional perspective, our community, smart money concepts, we all would agree that prior to that wick forming, it's in a small little narrow consolidation. The advantage was we went up one time frame to 5 minute. It was part of a sell side and bounce by sign efficiency, continuation likely, gap still unfilled, look for lower prices. That wick formed, and that was the catalyst for us to be a part of the expectation of moving lower. We had now something to commit to the price structure versus just simply, well, we don't know what it's going to do. It needs to start showing a willingness to go lower. That's the distinction between just looking at consolidations versus time distortion. Time distortion is this, we're waiting for more information. We're not looking at it as it's chopped, it's untradeable. We're actively waiting for something to give us an indication that our predetermined bias is going to be delivered to. So I'm not sure if that's accomplished the response he was aiming for, but that's the best I got for what we're being asked.
It's awesome. Awesome. Where'd he go? I lost the caller. I lost the caller. X is undefeated. Shocker. So I'm answering on response to. I don't even know where he went. So I'm sorry. Just like disappeared. Anyway, I think that was a phenomenal answer, and that should suffice. We'll go back to the recording, and I apologize for our guy falling off.
Just an observation real quick.
Yep.
I started this morning on X, and I said 26,466 was going to remain on my radar for the day. Okay.
Mm-hmm.
Not knowing where we're going to open up at 9:30 because it was way before that. We outlined the standard deviation on the opening range gap. We've seen it flirt just a little bit below that. It pulled up into that range, and then they used the 26,300, which is an old high. It consolidated around that, had a nice little wick that traded down, but didn't get to the lower the opening range gap. Notice that's occurring at 56 minutes after 10, so during a macro time. Then price consolidated back in those small little ranges and then rallied higher, and it ran for that 6,466 buy side. So if you take a screenshot of your minute chart right now, what you've seen is this is the same primary functions that I use when I'm talking about when I was teaching private mentorship and when I was teaching higher intraday technicals about predicting and projecting highs and lows. That daily low, I'm not on the low, but I'm real close to it. And that to me, in this climate, in this market condition, I'm satisfied with that. When it wasn't so aggressive with all the volatility, you would have seen the bodies just right at that level or just above it by 1 or 2 ticks, and maybe the wick might just flirt just beneath it, and that would have been the low of the session in the morning. The day, I'm not trying to predict that, but sessions, so if your entire trading is involved in just simply looking at everything prior to noon Eastern time, 9:30 to noon, if that's what you're envisioning, that's your entire focus. 466 was told you that's on my radar. The low, you watched me outline as a target using standard deviations. When you evolve in your understanding and knowing what you're looking for, normal retracements, it's part of a healthy up move. And that dropped down into that standard deviation after breaking the opening range low. It forms the low of the session and of the regular trading hours day. 466 being taken out, that would be like a full run if you encapsulate your day like that. So if 26,466 was my high, that's all I want to look for. I don't care if it goes any higher. And I'm fishing or hunting the low of the day. You watch that be put to task in front of you today, live. So it's not just me here. Look at old lecture notes. Look at old charter membership videos. Look at old paid mentorship videos and they're stale. They're no longer useful. That's not true because I lean on a lot of those things still today when I'm calling all this stuff. And if you put the time in, invest into yourself with it, and study it, look for these things to occur, the question is again, is this buying and selling pressure? Because how do you get to that conclusion with the low of the day forming on what I just outlined? And that's just one concept. That's just one thing. There's other things I have that gets closer to the actual low. But just by and of itself, if you're brand new, wouldn't you be satisfied if you could anticipate a run of the range like this? It can go down as low as that standard deviation, and it can go as high as 26,466. And anything beyond either side, once it's done this, you're satisfied and you walk away from the day. How many of you could actually do that? And do you see any value in knowing how to do that on a not an everyday basis, but 3 to 4 times a week? Just something to consider.
Love it. 24, 26, 496. Just a few points away from my calculated target just a few minutes ago off of midnight.
Get
Michael.
it, man. Get it.
Not bad. Not bad. Not bad. Let's see if we hit that before we hit. I mean, it's been a nice. We just got a price to and through the 504, and we will have live called that projection off of midnight real time. So high five, right? Like, so Kevin, you're up, bro. You there, Kev?
Hey, can you hear me, guys?
Yes, sir. How you doing?
Okay. Very good, and you?
Excellent.
Great.
Excellent.
So my name is Kevin, and I primarily trade ICT, and I utilize the institutional order flow to frame 15-minute market making models. I call them well, they are expansions. I only trade expansions. And
Okay.
yeah, I also learned from Dave from the OHLC Academy.
Oh yeah, FX for Living.
Correct.
FX for Living is a very strong ICT student and a good friend of mine. Yeah, he's been up here. He co-hosts. FX for Living is a very, very good, very strong ICT based trader. He uses really, really good concepts that are rooted in the foundation of what ICT teaches.
Correct. And I also met him because of you, so thank you for that. But I want to ask, ICT has been talking about a lot from high resistance liquidity, high resistant liquidity run conditions, not only today, but on previous live streams. So my question is, can we expect better market conditions from one session to the next? Okay, and this lasts for the whole day.
I don't know how to forecast whether or not we're going to have a good session like tomorrow or I look at the economic calendar and I kind of get a feel for how many days we have left for the weekly range and where's the manipulation going to be. And then you're still forced to look at the charts when it's presenting it to you because it could start off ugly and become wonderful, or it could look like everything's good and then it goes to shit. So I'm struggling with that right now too because there's so much, it's difficult. It's difficult for me to be able to say with a great deal of conviction, these are the rules I go by, except for what I just said here. I just look at the economic calendar. I expect some measure of manipulation around that. And then on the other side of that news, if there's open calendar days and we have 2-3 days left of the week, generally it can become a better environment to trade in. I don't feel comfortable answering beyond that in terms of giving you something to walk away with and feel like you've gained a greater intel.
Correct. So yeah, basically something that happens often is that we enter into the opening range gap 9:30. I'm sorry, 9:30, and the price starts to go from very clean delivery to now a very choppy price action, and that kind of feels like an ambush. And then something that I would like to comment is that you mentioned we have to kind of like qualify or identify what price is delivering or how price is reacting to our raise when we enter into that opening range gap to kind of have an idea what the section is going to bring us or offer us.
If you start seeing the gradient levels that we do, the quadrants and the octant levels, if price is respecting that and you're seeing sensitivity with the wicks and the bodies inside the opening range, that is one of the strongest telltale signs that you have a market that is delivering algorithmically and it's clean price action. So it can be trusted more. But if you're watching price just scoot around inside of the opening range and it's just muddy, the bodies are just finding their own little location, or the wicks are going into levels that don't make any sense, that's manual intervention. And the easiest thing for you to do is take a step back and say, I'm not touching it right now. And if that means don't touching it for the rest of the day, be okay with doing that.
That was the question I was looking for. Thank you very much.
Thank you for your question, man.
Random wick high on that level, huh?
It's all random. Come on now.
Yeah, it's just an application of the concepts. It's nothing more than just simply applying what we've learned. We got Manos here. We got Johnny here. We've heard from Double Trader, Nico Wayne, Jim Brown, Kevin, Zachy. Where did Johnny go? Johnny was just here, but we have Manos. Manos, what's up, buddy? You and where you at, bud?
What's up? I'm in
How you doing?
Greece, actually. How you
That's what
doing?
I thought. That's what I thought. That's why I first opened the question with how you doing or where you at.
I'm doing very good, man. Thank you. Can't complain, bro. I'm in a very beautiful place.
Nice, man. How's what you got for us today?
Well, I just
Can you
wanted to
post some
point out.
pics?
Say
My
that
wife wants
again.
to go there. Can
Oh
you
yeah,
post some
I'll
pics?
post. I'll post some pics. I actually posted a video on Easter because my Easter was a week after your guys. I just celebrated. That's the reason I actually came down here. Yeah, it's gorgeous, man. I posted a video when I first got here. Beach, super quiet. Um, Perfect weather. Couldn't have asked for a better Easter, to be honest.
If I
Family,
could be
me.
honest, my wife's trying to talk me into moving there. So I'm like, I can't do it. But maybe we can get on a boat and sail there.
You
I
still
ain't
got an
too,
issue with
you know,
planes, right? If I'm not mistaken, you haven't been
I'm
on
on
a
the
plane.
no-fly list. I can't do it. No-fly list for me.
Oh,
Yeah, I'm sure there's some cruises that'll get you down here, bro. Beautiful. But what I noticed this morning, because I'm up again, like on a different time zone, at 6 a.m. New York time, it was, well, besides the 6 a.m. New York time, first of all, the low that we made was exactly 1.5 standard deviations of the Asian range. Just pointing that out. And a beautiful 2022 model delivered. Actually, I was in a long. I actually got stopped out, but while I was incorrect and tape reading, I ended up closing out at break even. But it was a demo trade, and I was ready to execute on my funded accounts because when I was in the wrong side of the trade, I actually noticed the 2022 model playing out. I got into a long at around 2:30 New York, New York time. I was in the green for a little bit, and then went against me. Once it went against me at 3:05, and then it swept those equal highs. I actually saw a beautiful entry, premium entry, because again, you could pull the fibs. I pulled my fib for the premium entry from the 349. No, excuse me, from the 3:52 a.m. high to the 3:57 low. And that I actually ended up taking the 2:06 a.m. BISI that broke through the Asian range. And I was kind of using that as my support level when I did want to see price go higher. And then when I noticed that we started closing below it around 3:05. I got caught in a little bit of chop, I'm not going to lie. Then I seen the sweep of the equal highs, and then we got a full closure below the 3 o'clock lows, those 310, 311 lows, 312. Once I saw that close, I took the nearest swing, and it was actually a perfect 2022 sell model with a premium entry, with the nearest liquidity level just being the 1:15 a.m. lows. I mean, I don't know why I hesitated to take that. it was just perfect. And started just measuring things out. I was like, look at how perfect that low of the day happened to be 1.5 standard deviations of Asia. And then what I use is the first 5 minute fair value gap in the 10 o'clock hour. I ended up taking a long. Once we reclaimed that fair value gap at 10:27, 10:28, I ended up jumping in a long at 10:32. Real quick, 50 points, one micro. So I'm happy with that. And again, like there's certain fair value gaps that I see are very, very favorable. And they're always the ones that end up taking a session liquidity. Those are the ones that I use. And I like to use those as inversions. That's my
They're very
support
strong.
resistance levels.
They're very, very
Say that
strong. If
again?
you, no, you say that again. I want you to say that again because they're very strong.
Yeah, the fair value gaps that I use for inversions or for like my support resistance levels are the ones that go through session liquidity levels, like a session high or a session low, or previous day high or previous day low. If I see a fair value gap going through those levels, those are the ones that I use. And I like to drag those across my screen and use those as inversions for support resistance. Once I start seeing the upper halves, now that you've been teaching the quadrants pretty specifically, with the upper half or the lower half, like once you go through it, you want to start seeing price respecting. If you're trading above it, you want to see price respecting the upper half. Start seeing candles closing in the lower half. Then you kind of want to bail out on that idea. That's been helping me a lot, a lot. The way you've been teaching this year is just incredible, Michael. I'm actually very, very grateful because you're always a student of price as per Kit. And I've been learning a lot this year, man. Even though I'm in Greece, I'm on a different time zone. It's kind of hard to get on the charts when you're on. But the few times that I do manage to catch you on, I'm like impressed.
You're
Very
tapped
impressed.
in. You're tapped in, bro.
I'm definitely tapped in, man. I've been in drawdown for almost a year, to be honest with you guys, and it's been the last couple of weeks that almost all my accounts are back to break even. I literally got 3 accounts in drawdown, and the rest I have 7 funded accounts. They've been in drawdown since July of last year. Not even gonna lie. And after today's trade, 4 out of the 7 are at break even, and then the 3 are just slightly in drawdown, almost at break even as well. So I'm actually very, very proud of my performance. It's just the fact that I've been disciplined and sticking to my rules and not
Well
trading
done.
with more than 2 micros is what I'm mostly proud of, and taking the loss, just shutting down, not chasing that. Not, I'm okay, ending the day red. Because in the past, ending the day red, not being able to end the day red is what is the reasons I ended up blowing so many accounts, live accounts too, not just funded, because I never knew about funded until 2-3 years ago. But anyway, yeah, Michael, man, you really appreciate you, man. This year it's been phenomenal, man. I didn't think I could learn as much more as I have been, and it's awesome, man. Just keep doing what you're doing. Thank you so much, for
Thank you for
real.
your
Of
feedback, man. I appreciate it.
course, man. Appreciate you
Great,
guys. All.
great feedback, Monos. Monos has got some pictures. He's over in Greece. He's following the carnivore diet. We've talked about strict health. He's a walking, talking billboard. He can back what he says. We try. I mean, post some pictures of yourself online if there is for any reason that you're doing that, and we're trying to give advice. That'd be a good reason for it, right? And Monos is Monos looks pretty good. Benjamin SMC's waving. Seems like he wants to come in. What do we got, buddy? We got 20 more minutes. TRU ICT Post Livestream, April 17th. Looking to see more shares this stream than any other, just if you indeed would like to see the proposed silver bullet fractal lessons taught by Michael.
We got 26,562 3/4 as the next upside. That's the continuous contract with adjustment toggled on.
Oh, what was that projection target, sir? One more time.
20,
That's for
20,
my notes.
26,562 3/4.
562 3/4. Yes, sir.
I have to remind you that I have a hard extraction time at noon.
I got you.
Thank you, bro.
We'll keep going. I love it. Benjamin, you're up next. Well, no, I'm sorry, Benjamin. I take that back. My boy Johnny's been here patiently waiting. I need to be a better host. Johnny, come on up. My ADD. I almost let some guy slip right in. X is already pencil fucking you, bringing you up, dropping you off, bringing you up, dropping you off.
Yeah, it's been pretty hard to get on, but yo,
I'm sorry, bro. I didn't mean to be that guy. And I almost pencil fucked you, and that's my bad.
nah,
So
it's all good. It's all good. Yo, listen, I want to get straight to the point real quick. Manos, not only session liquidity, but look at the internal liquidity. When it sweeps internal liquidity, and then the next candle right above that can't take 50% of the wick that just swept the internal liquidity. All those fair value gaps are fucking spot on, bro. You can take those with your eyes closed. They're 80% of the time they're gonna go in your favor. But my question is for Michael. Real quickly, I posted a picture inside the purple pill about 12 or 13 minutes ago in reference to a question that was made to you last week by a gentleman that couldn't get his words put together pretty well. So I'm sharing a picture so that you can go into it, take a look at it, and it's a fair.
thank you.
It's
Look at Johnny coming in, following up on the community. What a good man.
So if you look at the picture, you're going to see that it's a fair value gap followed by a volume imbalance, followed by a fair value gap, then followed by another fair value gap. If we continue to close today's candle bullish, and that becomes a fair value gap, it will be three fair value gaps and a volume imbalance. Would you consider that whole area one big suspension block? And that's my only question. And I believe that's the same question the gentleman was asking you last week.
I'm trying to find your post. Could you repost it real quick? I'll find it easier if it's someone else.
It's the top. Open up the purple pill. It should be at the top. Spread love, not war, and it's got the three gray, essentially FEGs with volume imbalances in between them. And Johnny's referencing a gentleman who came on who was just really struggling with his English, and we were both having a hard time understanding what he was saying. And a few other folks went back and listened, and they have contextualized more of what he was saying. And Johnny is asking you that question. So I think it's in the pill. If you can see the purple thing, Michael.
Got 4 arrows on
Yep.
it. Okay. Now, what specifically are you asking about this?
So if you look at it, it starts with a fair value gap, then becomes a volume imbalance. This is I believe it's an NQ chart with the B adjust on. So you're going to see the volume imbalance. So it's a fair value gap followed by a volume imbalance, followed by another fair value gap, by another fair value gap. If you couple all that together, will that then become a suspension block, or am I looking at it completely wrong?
It wouldn't be a suspension block, but you would want to take the low of the fair value gap that it originates from, and take it all the way up. And it looks like that candle hasn't closed yet, the highest one. So if it closed and it left that the highest pointing to the left arrow, if that fair value gap is confirmed with that last candlestick closing, leaving that gap there, what you could do is take the low of that highest candle and the low of the originating fair value gap that has the volume imbalance. It looks like it's like a hammer. It's right above the Y for the not the Y, the TV logo. It has a long wick and a small little body. Use that volume imbalance also as the low, and then run your gradient levels across all that. That's how I would use that. It's all consecutive imbalance. So I would grade all of that, and I would use the octants, the quadrants to key off of. And I wouldn't look at any individual fair value gap. I would use that entire range of inefficiency and grade it, and that's how I would use that.
All right, thank you very much. I appreciate it.
You're very welcome. Thanks for the chart. It helps when I'm able to see that stuff.
That has been kind of
You're welcome.
that's been a burning question over the last few days that's been accumulating from folks trying to understand what one of our friends came up and was struggling with. So Johnny did a great job of following through and figuring out what that was and bringing up that question. So thank you, Johnny, for that. I appreciate you. Benjamin, SMC, you're up next, buddy.
How's it going, fellas? So I got a quick question for ICT. I was talking earlier to the Wall Street guys.
Yeah, didn't
And
you have the proposal with Genius or something? Or
yeah, they wanted. So what happened was there was supposed to be some one-on-one, 1v1 type of trading with ICT versus them. But I messaged them and I said ICT's in for it. He wants to do it, and they go. They said that they don't need to, and that they said that ICT's not qualified enough. So
yeah, in other words, they're scared. So
so
and
I
if
wanted to ask ICT, like, how does, because those people have been trading for on Wall Street for like 40 years. How does they're not qualified? Like, are they not, like, I'm genuinely like, how does somebody that's new to trading get access to somebody that is qualified to help them learn?
I'm not sure I understand what you're saying. They're saying that they themselves are not qualified, or I'm not qualified.
They said that they didn't want to do the 1v1 versus you because you're not qualified and they don't need to.
Well, that's fine. That's their opinion. I don't look at the business through a floor trader's perspective or a broker's perspective. That's for certain. But I only acted on people saying that there was these guys. I didn't know it was the guy that with the bushy hair. I didn't know his name, but I've seen FN Financial News Network. It used to be that, then it became CNBC. Um, I'm familiar with the guy. I've seen him all the time on the TV screen, but I don't know who he was or what he was doing. But I didn't know that's who that was when I was getting emails saying, "Hey, look, go on to Benjamin's live stream right now. They're trashing your stuff. They're saying that liquidity runs aren't a real thing or whatever." And I'm like, "Okay, I ain't doing anything. Let me go there and find out." Well, I got there just a little too late. But obviously, regardless of who it is, if you want to compare and contrast notes with live trading, I'm for it. If you want to make it a fishing contest and dick measuring contest, then we'll go. I'll be ruthless with you. I'll make you look like a fucking clown. I'm not hiding from anybody. Clearly, you're here just like this. You're knocking on the door. Dude, the dogs are here too. The bottom line is, the point is,
that's
you know,
funny.
I understand that it helps with marketing. It protects them from being put against somebody else. And again, like I said earlier, even if someone finds the conviction to do something like this, they're going to be so scared that they mess up and I beat them. In their interpretation, it might be luck. And they know that the internet would never, ever, ever let them live that down. And because they're running a business, it's good business for them not to want to do it. And honestly, it's good business for none of you motherfuckers to fuck with me because I'm for free. Like, I'm for free. I'm pouring more into this than they do when they're making money off of it. Like, I'm here for free. I'm not monetized doing this. We're just hanging out. We're just, I'm trying to build up the community, encourage y'all. But I'll just say this. All the drama bullshit, all the drama marketing kind of stuff, like, it needs to go away. Like, it needs to go away. Focus on your own community. Don't talk shit about anybody else. I talk about methodology. I trash methodology. But as soon as someone says ICT, this, that, and other thing, and it doesn't work, and seeing these people, one of them being on TV, okay, you would think, okay, well, if there's an algorithm, this guy would know about it, and that's not true. That's not true. They're employees. If you own a company, you don't tell your employees everything that's going on in the behind the scenes of the company. Even the general manager doesn't know everything about the company. There's a lot of things that you hold back. So their perspective of why markets do what they do is limited to their perspective. That's their opinion. But I'm out here doing this shit. Like, I'm out here explaining stuff that isn't through the common vernacular that technical analysis is taught. So trading competitions, they're fun, they're great. It's good for engagement. It's good for clout and attention, all that stuff. But at the end of the day, if you have a business and you're constantly making a marketing attempt to do that, eventually you're going to find someone that's going to say, "I'll take you up on that," and then you're fucked. Then you're stuck, and you have to backpedal. And the optics on it's bad. It's really bad. So I know the guy's following me now. He had me blocked at first. The Einstein guy's got me blocked still, but the other guy, what's his name? The other dude, what's
David Green.
Yeah.
David Green.
Yeah, he's following me now on X, and I don't know what his intentions are, but clearly he can see what I'm doing. Okay, I'm out here, and I think it's funny that I hope they look at yesterday and today and think that's all there is, and they change their mind because that would be fucking fun. That would be really fucking fun. But As someone that has run a business through education and trading, I'm going to tell you this. As soon as you open that Pandora's box, as soon as you do that, you have to stay on that train. You have to stay on it. That means you've got to constantly do that marketing approach all the time. And eventually it gets tiresome. It gets very tiresome. And a lot of people that once they get good at whatever that you teach and you're part of that community, they get tired of going through it. It's like, okay, can we do something else? We've seen this so many times. The younger viewers, they like it. But beyond that, it doesn't really bring anything about any value except for it's a spectacle for a short period of time. You know, they could come out there and use whatever they use and run into a terrible run in the marketplace. And that may not be an actual accurate depiction of their ability to trade, but they force themselves into a decision from the public perspective. You suck as a trader because you caught a hot lick in the market that went against you. But that's not the entire, it's not the entirety of their career or their ability to trade, but that's what the perception would be through social media. So it's really a lose-lose all the time. I have nothing to fucking lose. It's more optics on me. But for someone that's running a business, it's this terrible business approach to do that. Like, especially someone like me, because I mean, I've got 2 million followers because I've done that stuff. That's what got me noticed. So anyway, I just toss that out there for you guys that are running these little communities and running your education circuits. Just stay in your own lane and do what you're doing well, and people will recognize you. Word of mouth, that's how I got it. And word of mouth, I didn't advertise, I didn't do any of that shit. And here we are.
Yep, same thing. And one quick trading related thing. I was in a long today, and I want to ask you if I made the right decision here. I was in a long today from that 1 minute 10:33 fair value gap, beautiful entry. And then I got wicked out to the bottom tick, like the last tick of that wick on MNQ that didn't show up on NQ. And this was my last trade before a 15K payout. And I got wicked out at break even on something that didn't even happen on NQ. And in my mind, I knew, I was so confident it was going to go to buy side. I know exactly, I've seen this setup happen a million times, but I still chose to not trade and walk away. Is that the right decision, or should I have considered a re-entry? I was emotional at the time, and I knew it was going to buy side, but what went through my mind in the heat of the moment was, if I lose again, I know I'm not going to be able to bounce back from it because of my emotions. So did I do the right thing by just letting myself walk away with that break even?
Absolutely. As soon as indifference leaves the conversation about what you're in terms of the trade, as soon as you feel one way or the other, euphoric, or you feel, wrecked because something happened to you, don't act on that through trading. If you have the and I may not understand this correct because I don't trade with funded accounts, but my understanding is there are platforms, and they may be all doing it, or maybe some of them, but they have a way of locking yourself out so you can't even go back in and do something else. Am I correct in?
Yeah, I did that with Tradeovate. Yeah.
Okay, that's a perfect time to do that, because you've lost the plot. Now you're in revenge, and now your emotions are driving the engagement, the activity of putting yourself in the market. Now you're wrestling your emotional stimuli, the response that you're getting from what you've done or what you suffered or whatever you went through. You're now placing that up against the outcome of a trade. And you're telling yourself, if I win, I have a rocky moment, a comeback story. And I'm the underdog right now. So, it's all in or nothing. That's not how you started trading. The trade you entered before you got to that state of mind, you didn't have that. It wasn't in the forefront of your mind. You were trading a model without any emotional stimuli around it. So if you go into the marketplace and something happens to you and you feel stimulated to the degree where, I know it's going to do something, but I'm feeling off. I'm at the mercy of my emotions and frustration. I did it today. Trading you fucked up and lagged, and I was like, okay, it broke my concentration, and I just rolled the stop down, and I was like, let me just get out with even if or cover costs hypothetically, and be done with it, because my concentration is broken, and now I have a vested interest to save face versus following a model. So it's always the right decision to remove yourself and say, I'm not going to act on that emotional stimuli, because you're doing it. It isn't a one-day event. These things repeat over and over again. But when you're caught in that moment, that emotional hurricane, you want to feel vindicated and restored, redeemed. And the only way you can do that is by your own hands. As soon as you invite that as the plot and the reason why you're taking the next trade, you're setting yourself up for more heartbreak. It's going to happen.
Yeah, and this was one of the harder ones for me, just because it was one trade before a payout, and this trade I can't say shoulda, coulda, woulda, but would have been the trade to make me that 15K, and it was also in front of 1,000 people, so I do feel like I did the right decision. There's a part of me at the back of my brain that says, oh, if you would have took a re-entry, you would have won the trade anyways, but I know I made the
No,
right thing. I went and made some food and locked myself out, but
yeah, that's the right thing. But don't. Here's another thing. I study live streamers all the time, and you're doing something that is making trading harder than it is if you just did it by yourself. You're bringing a degree of difficulty to it that the average person doesn't have when they're trading in the solitude of just themselves. They only know that they and their broker is the only one that can see what they're doing. When you are live streaming, you're elevating the output to such a degree, and because you care about your audience, you want your audience to see value. You want to entertain them, and they want to see you do well. They want to see you make money because they live vicariously through you. So as a live streamer, it's very difficult for you to manage all that stuff, and you have to train your audience to be mature enough to say, "Listen, I'm out here doing this, and I'm human too, and I'm going to have things that go through my mind, and I want to do well in front of you. I want to encourage you as the audience, as the students, or whatever you want to call your community. That that's a real thing, but you have to remind them that you have to be in control, and you have to be sober minded. You can't get drunk with the fevered pitch of what is available in terms of the spectacle of live streaming. And the mature audience members will appreciate that, and they'll understand what you're doing. And when you cut bait and say, I'm a little off right now, and I'm not allowing circumstances to dictate my trading versus my model. And if they're there to learn, if they're there to view the market through a model perspective, they'll get what you're saying and they'll understand it. And let the other people talk shit because they're broke.
Yep. I appreciate the answer as well. I also want to let you know that last month I retired my parents, both of them, from trading, and I started with you, so I really appreciate that as well. But
That
thank
is
you for your
awesome.
time, brother.
Praise the
And
Lord. That's
Kit, thank
awesome.
you for bringing me up here. Yes, thank the Lord always.
Yeah, good on you, buddy. How old are you, Benjamin?
I just turned 20, March 29th.
Good for you, buddy. Good for you.
Thank you.
And did you study any other concepts before you came across Michael's?
Well, I started in 2020, basically with my buddy just gave me a bunch of indicators saying once it hits this line, look for that. That's before I would even call myself a trader. That was for like 4 months.
Okay.
But then I came across ICT's YouTube.
No, yeah, no.
And
That's I
yeah,
ask because you're 20 and you're profitable, and I again there's a genre of student that pretty much only came across ICT, or there are some younger folks who have really only traded ICT, and you're really close to that, right? Like you fumbled around and played around with some stuff, but when you really took it serious, you would be, I not that it matters, it's just an archetype within our community, and some of the younger folks tend and that are successful tend to have been folks that have found Michael's content and stayed pretty much focused on that and solely that, and have found their model and have listened to him and have literally done the work exactly as he describes over time in demo, treating it like school, treating it like a laboratory. And was that the case for you, Benjamin?
yeah. Well, everybody makes fun of me for my cases because I got my first payout on my fourth year of trading because I took it so slow, like
Well,
ICT
dude, if
said.
you're
I
20 and it took you 4 years, I love that for you, bro. I mean, congratulations. I mean, I honestly, my daughter's on your journey. A lot of us are parents and we have kids. So, I mean, you're doing some clearly you're doing some things correctly. So kudos to you, mate.
Thank you. But yeah, I've been with ICT the whole time, and I would say it gave me that advantage because it's kind of like what ICT says on not going to live trading in your first few months because the habits that you build early on kind of stick. And the fact that I didn't build habits with different concepts made me be so much more able to learn and adapt what ICT taught a lot faster. So I feel like that's one of the reasons why I'm a lot more consistent. But again, I took the longest route possible because of my age. I didn't risk anything. I only demo traded on my close to my second year of trading. I treated it like school. I just studied, and I didn't even bother
And
trading.
that's the correct way to do it, brother. So the fact that you're thriving right now because you utilized the delayed gratification and you approached the mentorship and the YouTube channel in the correct way, I just say kudos to you, man. You're doing it right. I like seeing it.
Thank you, brother. I appreciate it. And thank you for bringing me up here. Always a pleasure.
Listen to Benjamin coming in to Trade a Roundup like he's the host. He's like, thanks, kid, for coming in to Trade a Roundup today. Appreciate you. Nice
Alpha.
coming in here. I love it.
I was in sales. I
appreciate it, bro. I like it. There, I'm not. I'm saying that with love. I like it, bro. I like it.
All right, let's bring. I don't want to take up the time too much.
Let's bring up our next guest.
I don't want to just leave on a silent note. You know, I need to say something.
No, I appreciate it. I mean, if you want, we can. You know, I can demand that alpha order and take it, but it's not really about that, right? It's the fun of what we're doing. It's not about alpha.
All right, now kick me off this stage so I don't have to do another sales pitch.
Okay. Well, you can just put yourself on mute. How about that, buddy?
Okay, I'll do that.
There you go. Very good. Market Oracle, regular here, Trader Roundup. We got never mind.
Yeah,
12 o'clock hard stop.
Yeah,
hard stop.
I got to extract, and I'll catch you on the flip side.
Yes, have a great one.
Thank you so much.
Have a great one, everybody.
Bye, everybody.
Goodbye. God bless. Amen.